But actually, Bitcoin is not as volatile as people believe. It's at 24% annualized 30-day vol, which is very close to gold at the moment. It would be disappointing if the government ends up agreeing that actually stablecoins should not be offering yield. I think we could easily see this divergence between the technically competent banks, Goldman Sachs, JP Morgan. JP Morgan in particular has created its own stablecoin. Its message is we're embracing the stablecoin crypto industry. So this is, I think, right at the sex, drugs and rock and roll end of the crypto world, right? So to expect traditional financial companies to go headlong into DeFi.
Hi everyone. Before we get started, if you enjoy watching or listening to this podcast, please hit the subscribe button. It's free to do so, and it helps NFK Podcast to bring more exclusive insights and interesting guests in the future. And if you find this episode useful, feel free to give it a like or leave a comment with your favorite moment. Now, let's begin. Enjoy. There are firms that ride the crypto cycle, and there are firms that shape it. CoinShares has spent the past decade helping institutions navigate digital assets from inside the swirl of capital flows, shifting regulation, and real-world macro risk. At the core of that effort is the research desk, and James Butterfill leads it, tracking the pulse of everything from ETF flows and Fed policy to stablecoin frameworks and sovereign risk narratives and more. James, thank you for joining me today.
Thanks for having me on the show.
So let's start with your own story. I always do that. Before crypto, you were steeped in traditional finance based on your LinkedIn profile. Can you walk us through that early part of your career and how those experiences shaped how you now approach the digital asset space?
Yeah, I can't believe I'm saying this, but I've been in finance world for 25 or 26 years. I cut my teeth in looking at emerging market equities at ING Bank. And then, but that was what they call sell side, so stockbroking. Didn't really like it, didn't really fit with me. I moved to HSBC, which was what they call the buy side, so it's managing money. And that really worked for me. People are much more collegiate, work together. I'm naturally quite a kind of tech enthusiast. So when I moved to Coots, I spent a lot of time where I was head of equities and ran a large discretionary multi-asset fund. I employed a lot of tech investment themes. So one of the big ones at the time was robotics, cloud computing. And I really liked those kind of themes, so they really connected with me. And then I moved to ETF securities, which is a smaller business, but it was issuing ETFs. And when I was a fund manager, I spent a lot of time actually transitioning a lot of hedge funds in the fund out to selling those and adding ETF positions. So I could see this real growth industry. And ETF securities was a real specialist in gold. They had $13 billion of assets in gold. And I was head of research, and I spent a lot of time really helping launch not just their commodity funds, but other funds. A robotics fund was launched there, and various other thematic equity funds. But one of the questions, this was back in 2015, one of the questions I kept on getting was about Bitcoin. And I just felt, given the client questions, like I should learn about it a bit better. I had heard of it, but not taken it particularly seriously. So I started writing research on it, and I struggled a bit. So I thought, actually, I'm a bit of a tech geek. I like building computers in the past. Why don't I create my own Bitcoin mining hardware and Ethereum hardware? So that's what I did. I had Bitcoin miners running in my basement for 2 years, and that was, my wife thought I was a bit crazy, but it helped me understand it a bit better, helped me get into it. And then CoinShares, ETF securities was considering acquiring actually CoinShares at the time, a long time ago. And I figured that it would be a good, eventually through that relationship, I ended up working at CoinShares. It wasn't acquired by ETF securities. And in fact, is growing to be much larger than ETF securities, which was eventually sold. And now I became head of research. And what I've been trying to do at CoinShares is establish a much more institutional level or grade of research than has, instead of this kind of trust me bro type viewpoint in the crypto, which is very prevalent 6-7 years ago when I started at CoinShares. I really wanted to back up a lot of what I was saying with hard figures and numbers, and so that's my journey into crypto.
And what was it about exactly? What was it exactly about CoinShares that made you want to step into the research side of the industry?
Oh, I mean, I've always been in research, really. I was in research when I started my career. And I've always been someone that likes solving puzzles, quite technically focused. And so, when I started at CoinShares, it absolutely made sense. Having run research teams before, my role is both management. It's also helping manage money as well, actively. And so I had that skill set, I think, to become the head of research, I suppose, at CoinShares. And equally, I mean, I fully admit that I think there's parts of the crypto world that I don't particularly know that well. And I rely on some of my other team members, particularly in some altcoins, to lead the expert knowledge in that space for CoinShares.
Mhm. And your recent pieces of the reports, I've checked a couple. Your recent pieces have woven together ETF flows, inflation surprises, and even employment data revisions. Uh, could you please share some insights with the listeners?
Yeah, I mean, I think it was initially 5 or 6 years ago, quite an unusual approach to understanding how Bitcoin prices moved.
Mhm.
So I take quite a macroeconomic focus. Now that might seem a little bit strange, but um, I think I spent a long time when I started at CoinShares writing a piece of research called "A Little Bitcoin Goes a Long Way," and it's how Bitcoin behaves in a portfolio. And any kind of institutional investor that's considering buying Bitcoin will want to know how Bitcoin behaves throughout the economic cycle. And for that reason, you need to know how what Bitcoin is as an asset. And actually, at the time, I think even now, Bitcoin still establishes its identity. But back then, it was hard to know exactly what Bitcoin was. So I had to look at fundamentally what Bitcoin is. It is, I came to the conclusion it's what I would describe as this emerging, and I emphasize emerging, store of value. But it also has this growth component to it as well. So, it was something that was born from the internet. The internet has reinvented many different things. Um, it was something born from the internet. And as the internet grows, I think so will people's creativity around um, the uses for Bitcoin will increase. So it's very much has that growth component to it. So that's why when we see trade tariffs announced and other kind of risky events happen, Bitcoin sells off. It is this growthy asset that's vulnerable to it, but it's quite unique that it also is this very fixed supply or very well known supply asset, which theoretically could make it a store of value. And actually, a store of value like gold or something, why do they become that? Well, it has to have scarcity, which it definitely has. But it also has to, I think, build a reputation of being a store of value. People have to see value in it. And Bitcoin's done that through energy, through expending energy, but also it's built up this image of it. There are other ones that do things similar, like Litecoin, but it's just not built that reputation that Bitcoin has. So it is slightly a self-fulfilling prophecy, and I could see that happening. And because particularly it's a store of value, stores of value tend to be susceptible to what's going on in the economy, particularly interest rate expectations. So a lot of what I write now is looking at who is the next Fed governor going to be. So most recently, you've seen the Bitcoin price fall a bit. And I think it was because hopes were dashed that Kevin Hassett would be the uh, the next Fed chair. Donald Trump said he wants him to stay in the White House. So who is it going to be next? People thought, okay, well, the next best person is Kevin Warsh, who's a known hawk, inflation hawk. He doesn't want to cut rates, he wants to raise rates. I don't believe that it will be that person. I think it will probably be something like Rick Reeder, who is a current BlackRock employee and a known dove. Donald Trump wants a dove. He wants someone to be spending money or even maybe printing money to support the economy, and someone like that leading the Fed, increasing money supply in dollars. It suddenly makes actually something like Bitcoin or fixed money supply or a much harder asset look much more attractive. So, I am regularly talking about inflation expectations, those sorts of things, and inflation releases, and because they have a big impact on people's monetary policy or interest rate expectations.
When you look at the current cycle, what's the macro variable most investors are underweighting?
What's the macro variable that investors are under reading? Yeah, I think so. If you look at global M2 at the moment, I see quite a few charts on this. I see quite a few charts on global M2, and it's priced, and it's an index that's priced daily. You can't get M2 growth data on a daily basis. All it's showing you is actually FX moves, really. It is published by banks, central banks, every month. But still, the point still stands that there is quite a close correlation in change in M2 money supply and change in Bitcoin prices. And what we've seen over the last year is Bitcoin really sort of decouple from M2 money growth. We've seen quite a lot of expansion globally in the G20 of money growth, but we've not seen Bitcoin prices move correspondingly. Interestingly, there is an asset that has moved much closer to M2, and that's gold. And maybe some of the meme coin investors have switched a bit to gold at the moment, but I also think it tells you there's a dislocation here. Either monetary supply is suddenly going to contract, and Bitcoin prices and Bitcoin investors have been highlighting that case, or there's a mispricing. Monetary supply is going to continue to expand, which I think is highly likely, and Bitcoin is quite mispriced relative to something like gold, and we'll see it snap back. Now, getting the timing on that's very hard. I think, there are some things at the moment in the world, events that are holding back Bitcoin. So one of them is the Clarity Act. The can's been kicked down the road on the Clarity Act. It's about stablecoin yield. That won't be till March. Who the next Fed governor will be, I'm not sure when that's going to be announced, but fairly soon. What will payrolls look like after this, what they call the birth-death model change? But ultimately those sorts of things will be resolved. And then we have this ongoing sort of gyration of geopolitics, really led by Donald Trump, which is actually just creating a lot of volatility in the asset. But actually Bitcoin is not as volatile as people believe. It's at 24% annualized 30-day vol, which is very close to gold at the moment.
He recently mentioned that in one of his tweets, I think it was yesterday or recently, that if you crypto guys want the greenest candles, then we must go for Greenland or something like that. Do you think that you mentioned Clarity Act, right? And it has been proposed almost recently. So, why is this specific bill such a pivotal moment for the future of DeFi and stablecoins? And do you think it is a pivotal moment?
I think it's pivotal for certain assets. So I think it's pivotal for Ethereum in particular, because most stablecoin payment rails are on Ethereum and Tron. Very little actually on Solana at the moment. Solana is, I think, defining its niche as a meme coin trading platform at the moment, at least. So stablecoins aren't really operated on there. So the Clarity Act at the moment has been hijacked by the US Senate Banking Committee. They don't want stablecoins to offer yields because, well, it directly it threatens the existing incumbent banking system and how banks make money. So I understand that. They're thinking very much of their own challenges. It would be disappointing if the government ends up agreeing that actually stablecoins should not be offering yield. And I think that would slow down the whole excitement and hype around stablecoin growth. I mean, Scott Bessent's already said that he thinks stablecoins are going to grow to be $2 trillion in size by 2028. So currently there's 300 billion. So that's a lot of growth. So it would, I think, dash a lot of hopes amongst investors. But ultimately, I think Bitcoin's fairly insulated from that. It's not about to offer any kind of yield. But it is this general political and governmental support for digital assets that has really helped, I think, recent rallies up until October, obviously, and when other forces really kicked into place at that point, causing this price correction. But yeah, I mean, the political forces, the political support, I think is quite important, or has been in recent years for Bitcoin prices and others and other assets, digital assets.
But that's an interesting debate, right? And dilemma between keeping the banks the way they are doing their business and offering a stablecoin yield or allowing that. You mentioned that it should happen, right? So it's better to let stablecoin companies or stablecoins to offer yield. How do you think that will affect banks in the long? No,
Yeah.
maybe not in the long term, but maybe in the midterm even.
Well, I mean, I think I think what we'll see is a divergence in banks. We're already starting to see this. Some banks will choose to embrace the new stablecoin technology. I mean, the government's objective of this is to increase the ways of owning T-bills. The US government has a problem with debt, and if you increase the channels in which people can buy US debt, US T-bills, then it will pull down yields. So it's very much in their interest to try and do that. So that's why I think the stablecoin narrative has really grown. But for banks specifically, I think we could easily see this divergence between the technically competent banks. I would put those sorts of banks such as, well, Bank of New York, Goldman Sachs, JP Morgan. JP Morgan in particular has created its own stablecoin. So its message is we're embracing the stablecoin crypto industry, and we're going to be part of that growth of the stablecoin industry. But there are other banks, incumbent banks, which might, it's a big ask technically to have stablecoin infrastructure and API infrastructure in your banking and provide it to customers. So technically that's very challenging. So you might find some banks just can't do that. They don't have the technical ability to improve. I mean, banks very much are tech companies, and the more successful ones are. So those that don't have that technical ability to do so, I think, are going to really suffer as we see that. So there'll probably be this divergence between the technically competent banks and incompetent ones. And maybe we're starting to see that. I mean, it's say with BlackRock, Franklin Templeton, Bank of New York, Visa, MasterCard all getting involved in it. So those that are not, I think it could be quite damaging for them in the sort of medium to long term.
And in your writings, you mentioned you noted cautious sentiment and whale selling, right? Coming back to that topic, even despite inflows, is that a warning sign of just a recalibration before the next steps? Yeah.
I think so. There's this funny thing amongst whales. They are the kind of original crypto bros, I suppose. And there has been this kind of almost religion about stock to flow and the 4-year cycle of halving and what impact it has on price. As a traditional investor, I think it's a bit absurd. I think that this idea that supply, which is perfectly known, you can predict halvings for the next 100 years with a week's accuracy, roughly. So that is supply is perfectly known. So why should it have any impact on price? It has historically, and I think it's because Bitcoin has not been a well-developed market. This time around in the cycle, so as the story goes, every 4 years we have a halving, and then at the halving we see the price rally. The price rallied in 2024. Well, there's two reasons why it could have rallied in 2024. It could be the halving, or it could have been that the Fed was just starting to cut rates and monetary policy was loosening, and Bitcoin had been in the bear market for a while and it was rising for that reason. if you look at the 2020 halving, for instance, it came at exactly the time that Donald Trump issued COVID stimulus checks. People were buying Bitcoin hand and fist with their COVID stimulus checks. They had a lot of cash suddenly. So what was driving prices? So we only have a sample size now of 4. Is that statistically enough to make meaningful extrapolations on how the price is going to move? The answer is no, it's not. But I also think it's a bit of a self-fulfilling prophecy. There are enough large whales that believe in this that can move price. You know, we've seen about $50 billion worth of whales selling since October. And that has an impact on price. Yeah, we're seeing institutional investors start to buy. If you look at the whale cohort, so those that own over 100,000, they're selling aggressively. If you look at the whale cohort between 10,000 to 100,000, they're buying. So we're seeing this transition of old whales move to smaller whales, and that includes ETF investors, etc. And that obviously destabilizes price. And it was one of the reasons why we saw the Bitcoin price correction, along with the government shutdowns of a complete black hole in terms of not knowing what was happening macroeconomically, along with the trade tariff threats from Trump on China at the time, along with Binance and the USDE collapse. There was quite a few factors that just all aligned that really didn't help the price for Bitcoin. And it's created this kind of mini bear market. And I'd emphasize a mini bear market because I think if we're to look forwards and what should happen to price, we're seeing increasingly loose monetary supply. We're seeing increasingly dysfunctional governments. There's quite a few tail risks out there. The yen carry trade collapsing, for instance, Russia invading NATO, or even the United States, which seems a bit absurd. But a lot of these kind of geopolitically destabilizing events might be quite detrimental to Bitcoin initially. But I think as people see that they sit outside the existing financial system, actually Bitcoin in the longer term, medium term, could benefit quite substantially from this kind of tumultuous time we find ourselves in.
What's a recent call or thesis your team got right that most of the market didn't see coming, and what did you learn from it? I think it goes well hand in hand with what you just said.
Yeah, I think I think the market still believe the US economy is very strong, that the Fed is not going to cut rates. I've consistently got this right, that the consensus for a December rate cut, for instance, was very low, and then like in the last week flipped on its head and everyone realized the cut was going to happen. I've been maintaining for a good couple of years that the Fed is likely to be a lot more dovish than people believe. And I like to think that we've been right on that. At the moment, for instance, the chances of a Fed rate cut in March look very low, only around 20% probability. My suspicion is they will cut rates then, and the market's kind of got that wrong at the moment.
Let's stop for a minute. Here's a brief moment of context for those who may not know me. My name is Nasib Fathi. I'm a scientific researcher in the blockchain space, and I work with executives and organizations as a growth and media professional. My focus is crypto at the intersection of institutional finance, market structure, and regulation. You are watching the NFK podcast, where these topics are discussed through conversations with people shaping the development of digital assets space. Do you think a lot of people are predicting a bull run happening actually in 2026? Does that make sense to you? Because you just mentioned, for instance, the rate cuts, and we were seeing the developments in the field in general, right? Do you think it makes sense to expect that in 2026?
Yeah, I mean, I can definitely foresee a lot of volatility. I don't, what we're certainly seeing politically around the world is just increasingly unstable geopolitics, and I don't see that slowing down anytime soon. And that does tend to create quite a volatile market for Bitcoin. Iran's actually a really good example of that. Actually, it creates worries about inflation through higher oil prices with Iran and what's the regime collapse there. But equally, at the same time, there's a lot of people in Iran buying Bitcoin and holding Bitcoin because the Iranian rial's fallen so much. So these things kind of have dual effects on Bitcoin. I think longer term, a lot of these kind of geopolitically unstable events would be quite supportive for Bitcoin in the longer run, but quite destabilizing in the shorter term. There's people that, just the general sort of fear that people have of these big risk events. And there's so many others. There's a yen carry trade collapse, as I mentioned earlier, Russia invading a NATO country, invoking Article 5. There's a financial market sort of hack that could happen. There's China invading Taiwan. There's There's so many different things that can happen this year that create a lot of volatility. But I think overarching all of this is increasing looser monetary supply. We see the strong price performance in gold. Central banks can buy gold. They can't buy Bitcoin generally around the world. But I think people increasingly see that dislocation between Bitcoin and gold and see actually Bitcoin that's better value than gold does right now. So I do see at some point that snapping back. I mean, I think this year we could achieve 200,000 at some point, but it will probably be quite a volatile ride up that way. By the way, we could easily see 70,000 too, depending on what happens. But I would see any kind of price weakness like that as great opportunities for investors.
Now that you mentioned 70,000, I must ask a question. What kind of events can lead to that?
What? Sorry, the
What kind of events?
200,000. Oh, okay. So we have a thing called a total addressable market, got a Bitcoin valuation model, which is looking at it's assuming that Bitcoin is a form of money, competing with other forms of money. And it's a multi-year thing. It's not about short-term price triggers. It's about long-term people transitioning into Bitcoin and digital assets. And so you can start to make assumptions with the total addressable market. For instance, you can take gold as one example, as you could assume that Bitcoin cannibalizes a certain amount of market share from gold. And you can assume it cannibalizes corporate treasuries. We're already seeing that in its early infancy with MicroStrategy or Strategy now and Metaplanet and a few others. Maybe more companies start having Bitcoin on balance sheet. Central banks are starting to buy in very small amounts, but and we're starting M2. It's another form of pot of money that Bitcoin could cannibalize. So if you take gold as an example, though, 10% of gold's market share, Bitcoin being 10% of gold's market share, would equate to around 120,000 per Bitcoin. 25% of gold's market share, which I don't think's actually that unreasonable, would be around 300,000 per Bitcoin. So the challenge is then saying, well, at what point does it get to that? And that's quite difficult. Knowing that sort of tactically when that's going to move there is very challenging. I mean, that's why I'd always advised to people who are thinking about owning Bitcoin, buy and hold it for a long time and just stomach the volatility, or regularly rebalancing your portfolio to deal with the volatility problem. So, I never say, okay, there's this trigger, there's that trigger. I mean, I talk about short-term things, such as the Clarity Act, such as the new Fed governor, such as falling inflation. Those sorts of things I think can really help. But it's just, I think we'll see this long-term sort of grind up of Bitcoin prices.
What's a moment when your own research changed your mind or forced you to shift a previously held view about the market?
There was no defined moment, I don't think. I think it's you go through phases of understanding crypto better. I would never say there was a penny dropped. I've always looked at Bitcoin quite critically. I'd say the more I've learned about it, the more convinced I've become that it's an asset that's going to be around for a very long time. It's establishing, we are witnessing the birth of a new asset class. But Bitcoin is an asset you can't just read one article and you understand it overnight. It's an accumulative thing. The more things you understand about the halving, about how supply is created, how miners, when they turn off rigs, it gives more hash, it gives more Bitcoin to other miners, all those kind of things. That sort of self-balancing mechanism, how much it's being adopted around the world, particularly in emerging markets, all these different kind of factors, I think, aggregate into developing a slightly sort of better informed view. And for now, I still think I don't know enough about Bitcoin, but I spend a lot of time speaking to clients to helping them understand it better.
It's very interesting and always evolving asset, that's for
Yeah.
sure. And I have an interesting question. So Bitcoin has whiplashed between optimism and hesitation, right? ETF flows were up, then sharply reversed. You've written that fears over sovereign sales, such as Venezuela's rumored stash,
Yeah.
are likely overblown. So, how do you separate market fiction from actual macro catalysts?
Well, at CoinShares, we've always been very data focused. Let the um, let the data tell you the true story. And the first thing when we heard that Maduro had $60 billion worth of Bitcoin, I was first quite skeptical because there are different websites out there that can highlight who the big whales are. I mean, Arkham is a really good website for that. And it is Maduro's not on that list. The US government is, UK government and others are. So either he has a lot of Bitcoin spread over thousands and thousands of wallets, or it's not true. And so we started to look into any wallets that Maduro owns. There's some really interesting Bitcoin forensics companies, such as Chainalysis and Elliptic, that try to identify wallets, and there's nothing, no information from them. And actually, the source of that information lacked any kind of credibility. So, our conclusion is that is not true. The really interesting thing about Bitcoin and digital assets generally is the blockchains are public. You can scrutinize the blockchain and figure things out for yourself. So I do think that weighed a little bit on prices. People say, "Oh my God, there's another $60 billion overhang that's about to be sold on Bitcoin." This kind of idea about whales and them being a big supply overhang that's going to dump on the market, I think does from time to time weigh heavily on Bitcoin.
When we see major inflows followed by $1 billion outflows, how should institutional allocators interpret that?
Yeah, I mean, what we're seeing, like this week, I'm just looking at the numbers, we've seen $1.6 billion of outflows. That leaves us year to date at $809 million of inflows, so still net positive. I mean, last year, yeah, we saw some pretty strong outflows last year, but if you think in 2024, we saw $48 billion of inflows across all the digital assets and ETFs. And in 2025, we saw $47 billion, so pretty much matched. Well, there was definitely a switch. People were buying a lot more Ethereum. They're much greater, nearly a 3 times increase in inflows into Bitcoin, or into Ethereum, sorry. So there's a little bit of switching around going on, and I think the Stablecoin and Clarity Acts had an effect. But I think I wouldn't say fund flows necessarily lead the market. What I found interesting is when you see outflows, when you start to see the delta in those outflows change. So when you reach the bottom and there's still outflows, but there's less and less. That's quite often a good indication of where markets reached a bottom, and from price perspective. And at the moment, we're not seeing that. We're seeing outflows increase. I mean, I'm just looking at weekly flows. So last week we saw 2.1 billion of inflows. So I think sentiment's very mixed, and it's very influenced by, I think the fear this time was Trump and Greenland and tariffs. Hadn't helped at all.
Reflect the potential Fed chair announcement as a. Let's come back to this as well. Just one more time. We reflect the potential Fed chair announcement as a sleeper event for markets. So if Kevin Hassett, right, gets the note, and markets read him as dovish, what would you expect the knock-on effects to be for crypto liquidity and risk appetite?
Yeah, I think we'd see an immediate repricing of the markets. Powell at the moment is a known hawk on inflation in particular. The employment situation is looking quite weak, and probably will increasingly weaken in the US. And he has done some cuts, but I would class them as, if you can, as kind of hawkish cuts. He's always said, yeah, this is the only cut we're doing, and inflation's still not looking good, so don't expect any more cuts. That doesn't lead to a signal that monetary policy is really going to expand a lot in the US. If we have a dove like Kevin Hassett, which I think is looking less likely now for Kevin Hassett, it's probably more like Rick Reeder. If we have a dove, I think we could see a lot more rate cuts, a lot more money printing in the US as well to support the economy. Don't forget the US is in a significant debt situation. It's easier to print more money than it is to raise more capital through the debt market. So that kind of dovish outlook, ongoing dovish outlook, I think would be a quite important trigger for Bitcoin. And as I said earlier, this is why watching the Fed, watching the next governor can be. And thankfully, we have a good crypto website platform that does all this, Polymarket. There's a really good website there. At the moment, there's a trade on Polymarket that I'm looking at very closely called "Who Will Trump Nominate as Fed Chair?" And it's amazing to see the probabilities fall for Kevin Walsh. And over the last day, Rick Reed has gone from, I think, the probability of 10% to 31%. So, yeah, it's quite, that shows you, well, Polymarket's a great on-chain success story. And also it's a great indicator for the markets.
Yeah, sentiment and for sentiment analysis, right? Okay, and at the same time, you noted that job data revisions that might muddy the water, right? How should crypto investors adjust when the macro indicators themselves become?
Okay, so now we're getting into proper macro geekery here, right? So the Fed has said there's two things that really influence policy, monetary policy. It's inflation and employment data. And the problem with employment data for many years has been that when it's published, this is US payrolls data, a month later it gets revised down because they get more and more real data in rather than having to make estimates on employment for that month that shows you actually it's worse than it actually is. And that's telling you there's something wrong with the model which they use. Because when you publish payrolls, it only probably represents about 40% of the actual true employment picture because they have to make estimates, and different states feed in data at different times. It's a challenging data collection, statistical data challenge, really. And so there is this thing in payrolls called the birth-death model. So they have to make an assumption about how many people are dying and how many people are being born. And it helps with the obviously employment rate, etc., and other payroll figures. And it's known to, in the economic cycle, it's known to overstate employment. So it's been an ongoing challenge with the Bureau of Labor Statistics. And they've looked less and less credible in over the last year or two because they're really heavy revisions downwards of payrolls data. Like, you get 1 month, the market really moves on that data, and then a month later, it's actually much worse than they originally said it was. So they're making revisions to the birth-death model, and they expect that really sort of adjust for this economic cycle thing, and it might make payrolls look pretty bad. It might make payrolls look negative, i.e. show a truer picture of the US economy. And actually, Powell has said he understands and acknowledges the birth-death model and what impact it might have. But I don't think it's fully priced by the markets and by the Fed. I think it's going to be quite shocking. And I think it's this January that the birth-death model is first implemented. So we might have quite a shocking payroll number in February, or maybe it's, I don't know, only March. I'd have to double check the exact date. So it's this month or the next month that we see this change to the model.
We haven't talked much about CoinShares. Let's talk just at least a bit about it, about the company. And so, CoinShares manages over $1 billion in assets. How do you balance
over 8 billion, actually?
8 billion. Or sorry, my mistake. So, CoinShares manages over 8 billion in assets. So how do you balance data-driven insights with the need to move capital in real time? That's very interesting to me.
Yeah, so a big part of CoinShares business is, $8 billion of assets is passive investments. We are offering ETFs that are 1-for-1 Bitcoin, 1-for-1 Ethereum, etc. So for us, it's about creating legal constructs that allow investors to invest into Bitcoin in an exchange traded way, so they can access it in pensions, etc., and everything else. So there's not too much money management. Obviously, it's management of the underlying product and how we custody the assets, and they have to be very, very robust. Our custodians are sort of institutional grade custodians. That's very important. Clients don't want to invest in our products and see that they can be hacked easily. So yeah, we have very robust custody solutions. And then there's another element to the business, which is an actively managed part of the business. We have sort of a trading prop desk where we're staking significantly. We have various systematic trades that go on, and roughly 50% of revenues from CoinShares come from that trading activity. The rest is from asset management, which includes those ETFs. And also within that, I run a blockchain equities fund with a research team. That's at $1.5 billion in size, and it's looking at blockchain equity companies. So that would be Bitcoin miners. It might be PayPal because they have crypto exposure. It might be MicroStrategy or MetaPlanet or Oracle because it has a blockchain initiative, or TSMC because it provides chips. So we are looking at those companies and valuing those companies, making active investment decisions on whether they should be included in the portfolio and at what weight. And that is we create an index on that called Block Index, and then the ETF is a joint venture between us and Invesco, and that ETF is available to people worldwide.
You mentioned MicroStrategy. It's really interesting to learn more about your opinion regarding MicroStrategy and broader topic of DETs, right? So digital asset treasuries.
Yeah, I mean, so this was a theme we identified about 3 or 4 years ago. We didn't call them DATs. We didn't call them Bitcoin treasury companies. We called them token investments. And we saw that it would make sense that companies, particularly international companies that get involved in FX treasury management, and them having concerns over the weakness of the dollar, might decide to hold some money in Bitcoin into a hard asset. So we thought theoretically it could make sense. For a long time, there was only really one company doing this, and that was MicroStrategy. MicroStrategy's really evolved, though, from being a tech business, a tech consultancy, to just a Bitcoin treasury company with not much else. Its tech company still exists, but it's quite small relative to its Bitcoin holdings now. I think it's taken it to the extreme, and maybe it's damaged its credibility a little bit along the way. For a while it was a leverage play on Bitcoin, and that stopped happening. People, I think, have been increasingly concerned about Michael Saylor and the way at which he buys more Bitcoin, generally diluting shareholders to do so, or issuing debt in the convertible bonds market, or creating new pref share structures like STRC, etc. Some of those, it's left people concerned, and we're one of them. That obviously he's got a lot of pref shares with coupon payments, obligations. Is that sustainable? He would say it is. What happens if the price in Bitcoin drops? At what point does Michael Saylor? At what point is he a forced seller? Those kind of questions. I think it is a long way down. I mean, you'd have to see 50,000 Bitcoin in for a long period of time before he would be a forced seller. But it could unravel. So we still like the company, we still invest in it, but not as much as we have done in the past. I think it's partly because there are other token investment companies out there, or other DATs, that there's an increasing number of them. So the option of other alternates is increasing for us.
So Bitcoin as Bitcoin treasury companies, right? So you framed it that way. What about Ethereum treasury companies?
Yeah, SharpLink is the most well-known one, and that's one we've invested in. We like that, but I think that's a different thesis, right? So Bitcoin is this emerging store of value, And so I get why people are trying to offset their sort of dollar weakness risks with something like Bitcoin. Ethereum is different. It's much more of a technology move. Ethereum is a bit like Amazon Web Services, a bit of a currency rolled into it. I mean, that currency, ETH, is a pretty robust asset in itself. But I think it's a different prospect. It's more like a tech investment rather than a kind of option on what's happening on the US dollar. So a slightly different prospect. But yeah, we still see promise in that. I mean, I think, for both Bitcoin treasury companies and Ethereum treasury companies, your outlook has to be one that you believe that Ethereum and Bitcoin prices will continue to rise.
Mhm. Looking ahead, if you had to write a single research note that the entire industry would read and remember at the end of 2026, what would the title be?
Oh
And maybe
goodness,
some of the context.
this is uh well, every time I write something, that's what I'm hoping. So, the latest one is about tail risks around the world and how it influences Bitcoin prices. I hope everyone reads that. Um, uh, I think I have a mixture of different things that I write. Some are more like um, uh, regular research reports, such as the fund flows that I write every week. That has a very big following now. It's very flattering to see that people look at it so often. It's a very data-driven report. It doesn't require a huge amount of effort on my part to write, although it's, people like that data. I think it gives people validation as to what's happening in the market, how sentiment's improving or deteriorating. I write a report on Bitcoin mining every quarter and the state of the Bitcoin miners, what the hash rate is, what our projections are for hash rate, what the average cost of production is for Bitcoin miners. So we've got lots of different reports. And then I have these more sort of topical ones that, I think about, how do I come up with what I want to write about? It's slightly like what questions clients are asking me, what I observe going on in the world, um, and is it worthy me kind of expressing my opinion or not? And then we have big sort of things such as our outlook, which we write every year, where we're generally talking about big themes. So the big theme at the moment for this year is hybrid finance. So that is traditional financial institutions getting heavily involved into crypto, and we're starting to see real evidence of that now. And JP Morgan, Goldman Sachs are a really good example of that at the moment, and BlackRock.
How that can affect the DeFi as we know it?
DeFi specifically.
That's just okay.
So this is, I think, right at the sex, drugs, and rock and roll end of the crypto world, right? So to expect traditional financial companies to go headlong into DeFi, I think that is a little while coming. It absolutely makes sense for them to do so, but there's a whole new level of risk involved there. There's also a huge KYC problem. So this is something we've been discussing a lot at CoinShares. If we are to get into, we're a listed company. If we are to get into decentralized finance, theoretically, we could unknowingly be funding terrorist organizations, and clearly that's a problem. So how do you mitigate from that? And that's a big problem with DeFi at the moment. The KYC, so knowing your clients, is very challenging in the DeFi space at the moment. There are some really interesting projects that are dealing with this. So some zero knowledge proof projects. So Keyring, I think, is a really interesting one where it does the KYC on those clients in the on and the off ramps, i.e. exchanges. So once you've done it there, Keyring then follows those individuals around the DeFi system. So you can KYC, so you can strip out that, you can mitigate the risk of lending to a terrorist, so to speak. But so, and then there's some really interesting creative DeFi initiatives around looping of debt. That's i.e. for the traditional finance people, that's rehypothecation of debt. But that's a whole new level of risk. I think it's the DeFi, they're just getting on board with Bitcoin and Ethereum. Like to progress in DeFi, which is the ultimate sort of complexity of crypto, I think will take a little time.
All right. Then a closing question. Where is the best place for listeners to follow your work and keep up with CoinShares research?
Yeah, it's blog.coinshares.com and coinshares.com/research. It's all there. We publish a lot on Twitter and LinkedIn too, and a little bit on TikTok. But yeah, that's where the majority of our content is, so you can subscribe to it anytime.
And I will also include the link to your LinkedIn profile. Maybe that will help.
Oh, and the important thing to note is all our research is free as well. I think, CoinShares is on a bit of a mission to help just the world understand the crypto world a lot better.
Helps the industry a lot for sure. So, James, this has been a much needed look into the interplay of between macro markets and digital assets and how real research shapes real capital flows. Thanks for taking your time very much. And to everyone listening or watching, like, subscribe, or follow both of us and CoinShares, and share this episode with someone curious.